Good evening, everyone. Can you hear me and can you also see my screen? Can you hear me and can you see my screen? Can you hear me and can you see my screen? Yeah. Yeah. So in the first class, we talked about I introduced market structure. I talked about market structure shifts. Talked about break of structure, where market structure shifts is for taking reversals in the market. And and break of structures for taking continuations in the market. So whenever a market stress hit occurs, it's an indication that the current trend is about to end and the new one is about to begin in the opposite direction. Meanwhile, a break of structure is just for a key level to be broken in price, and then market will now continue in that same direction that it was trending at before. I talked about liquidity, which my liquidity is my inducement, which is the first pullback that market makes after a break of structure or a market structure shift. After that, I introduced one point of interest, which is my order block, which I said we have the bullish order block and we have the bearish order block. Now, I said I make use of 2 points of interest, one being the order block and one being the breaker block. So in this particular class, we're going to be taking the breaker block and then knowing when to use your order block and knowing when to use your breaker block. Now, that being said, this all comes down to the rules in picking a point of interest. Don't just pick any other block you see, and don't just pick any breaker block you see. How do you know when you're picking the right point of interest? Now, there are rules in picking a point of interest. And so I'm giving these rules. I'm going to be using an example from trades that I've taken before. Now, there are those rules. The first rule to pay attention to is your point of interest that you're picking needs to have triggered a break of structure or a market structure shift. Now, remember, I said the first part of this strategy is market structure, it being market structure shift or break of structure. If the point of interest you're trying to pick does not have any of these, or has not triggered a break of structure yet, or does not have a market structure shift, there's no point picking that other block or breaker block. So if you pay attention to this trade that I used as an example the other day, there was a market structure shift. So it fulfilled one part of the strategy, which is the point of interest needs to what trigger a break of structure or a market structure shift. The second rule is it needs to have liquidity protecting it. Now, by it having liquidity protecting it, I mean it needs to have an inducement. And what I say my inducement is the first pullback that market makes after a structure break or a shifting market structure. So the point of interest, the other block or the breaker block needs to have triggered a shift in market structure or needs to have triggered a break of structure. The second rule is it needs to have liquidity, that is inducement. So the third rule now says it needs to be unmitigated. Now, what do I mean by unmitigated? First of all, what is mitigation? Mitigation is price coming to tap your point of interest after it breaking structure or triggering a shift in market structure. So let's say, for example, this is your order block, yeah, and then price. So let's say this is the order block, and then price comes in and breaks out from here. When price comes back to tap this order block, that is what I mean by mitigation. Understand? The same thing as this bullish order block here. If market comes out and then if market breaks out from here, for example, breaks out from here, then comes back to tap this other block, that is what I mean by mitigation. So the rules of picking a point of interest, one says it needs to trigger a break of structure or a market structure shift. That is the first rule. The second rule says it needs to have liquidity protecting it, which is your inducement. So after you've gotten your market structure shift or your break of structure, you need to make sure that the point of interest you're picking has liquidity protecting it, which is your inducement. The third one is it needs to be unmitigated. So it means you should be picking the point of interest that price has not tapped into before. If price has broken out or shifted structure, need to make sure that the point of interest are peaking, that price has not tapped into it before. So now this is where this last part now that says it needs to be the one closest to liquidity. Now, first of all, I've talked about what another block is. Now, what is a breaker block? A breaker block is actually a failed order block, a failed point of interest. Now, let's say, for example, you analyze a trade for a sell, or in the market, there's always going to be resistance zones and support zones. So, let's say normally the price has been doing this, it will come here, it will go down, it will come here, it will go down, it will come here, it will go down. So, this other block is what's been pushing market down. Well, it says there's a scenario now where market now comes here and actually does not go down from it, just breaks past this zone. This is an order block that should have pushed market down, but it failed. This other block now that failed here to push market down has now become what? A breaker block. So a breaker block is a failed order block. It's a failed point of interest. You understand? That is what a breaker block is. A failed order block. So in this scenario now, this is an order block that was supposed to push market down here. So market has been coming here and reacting off of it. And then what happens? Market now comes here and breaks past this other block that was supposed to hold it down for a sell and breaks past it. This is no longer a bearish order block. This is now a breaker block. So breaker blocks are actually used to take trades in that direction that market broke into. So for example, this breaker block was supposed to push market down for a sell. And as market has broken past it, this breaker block will now be looking to use it for a buy. That is what a breaker block is. So a breaker block is a failed order block. That's what a breaker block is. So now the rules of picking a proper point of interest says it has to trigger a break of structure or a market structure shift. It needs to have liquidity protecting it, and it needs to be unmitigated. The fourth one says it has to be the one closest to liquidity. So now for each trade, there's a breaker block and then there's the order block. So let's say, for example, market is trending high and you see market making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Here is your order block down here for where market is buying from. This is the other block the market is buying from. And then right here is your resistance zone, which is your other block that market is supposed to be pushed down from. So here is your breaker, down here is your other block. Same as here. Here is your breaker, here is your other block. So the one that market is reacting from, that push the market up, that is where your other block is. And then up here, the market is breaking. That is where your breaker is, because that is the last zone in market, like your last high in the market. This is a breaker block. If market breaks it, this is a breaker. Then here's your other block. So that is what a breaker block is: a failed other block, a failed zone. So in this case now, this is your breaker block. So now pay attention. This is your breaker block here. This is also a breaker block here. This here is now an order block. Now for this trade now, most people that saw this trade would have been waiting for entry down here, the order block, because the first strategy, market structure shifts, liquidity, and then order block. They'll be looking to take their trades here from this order block. But if you follow these rules of picking a proper point of interest, you actually know that waiting for that trade at the order block would actually cause you a missed entry. Because why? The first rule says it has to trigger a break of structure or a market structure shift. Pay attention here. There was a market structure shift because price was initially on a downtrend, lower highs and lower lows, lower highs and then lower lows. So markets came here and then broke past this last high here, triggering a market structure shift. So first of all, we identified our first part of the strategy, which is a market structure shift, because the rule says the POI has to trigger a shift in market structure or a break of structure. So button one, a market structure shift, the first part of the rules of picking a point of interest has been fulfilled. The second one says it needs to have liquidity protecting it. Now, what do I mean by my liquidity? My liquidity is my inducement. And what is an inducement? Inducement is the first valid pullback that market makes after a break of structure or a market structure shift. Now, what is the first pullback that markets made after this whole impulsive move? Right here. So what was the inducement? The inducement is right here, which is our what? Our liquidity. So this is our inducement here. the first pullback our market made. On this 30 minutes is a week, but this is our inducement right here. So this is our inducement for this trade. So after that, the third rule now says it needs to be unmitigated. Now it means that price needs to not have tapped this point of interest after this structure break or a shift in market structure. So if you check now, price did not tap the body of this breaker block, and at the same time, price did not tap the body of this other block. But now you knowing you want to now use as your entry, because most people now get confused. Are they using this? Are they using this? Are they using this? Which one are they going to use for their entries? Now, if you follow this rule, you actually know the one to use, because so the first one says it has to trigger a break of structure or a market structure shift. Our trade has that market structure shift. Second one says it needs to have liquidity protecting it. Our trade has that liquidity, which is our inducement here. The third rule says it needs to be unmitigated. So if you check this breaker block, price is not tapping to it. So our breaker block is unmitigated. This breaker block is also unmitigated. This other block is also unmitigated. So which one are you now going to use? Now the fourth rule now says it has to be the one closest to liquidity. Now what is our liquidity in this case? Our liquidity is our inducement. Now out of all these point of interest here, which one is closest to this inducement? Is this breaker block at the top here. So this is where my entry for this trade was. So if you take your entry, keep your stop loss at the end of the demarcation of the breaker. That is how I was able to catch this buy for this trade. TP was actually here. I was able to catch this buy for this trade. I don't know if I still have the trade. Let me see if I still have the trade when I took this trade, because it's been long actually. If I don't have it, I'll just move on to the next. But then I want to check if I still have the trade. I'm not sure I still have the trade. Sure. I'm not sure I still have the trade. So that is why we used this trade, this breaker block as our entry for this trade. So anyone that was waiting for this other block would have missed this trade multiple times. And the thing with point of interest is there are multiple point of interest for each zone. So for example, now this is a breaker block. So this is the breaker block, and that's your entry. There's also another breaker block here. If you pay attention to this trend, you will see lower highs, lower lows. Market made lower highs, but it could not make a lower low. So this breaker is not valid because it was not this breaker that actually changed this trend. So it was here that made the lower highs and then lower lows. So this is a breaker block. This is also a breaker block, and this is your other block. So the point of interest here is this, and then this one here. So breaker, and other block. So if you see a trade like this now, most people will not be confused. Will they pick an entry from here? Will they pick the entry from here? Will they pick this entry from the other block? But remember, they said the unmitigated one. So as this was your inducement and market mitigates this one, this breaker block is no longer valid to be used again next time. So after market bought and did the whole movement, when it started selling again to pick another entry for a buy, you're no longer going to take your buy continuation from this breaker now because it has already been used. And the rule says it has to be unmitigated. So since price already mitigated this breaker block, if you're picking your entry next time, it has to be to the next point of interest, which is this second breaker block here that is also unmitigated. Price, that was why I was able to catch this second entry here. Now, after this one has been unmitigated, after this one has been mitigated, you can no longer use the second one again if price should eventually come down there. That's when you now start looking for probably another point of interest next to it, which is also unmitigated, which is now this other block. But trade may not still hold the buy other block, because if market buys and hits CP and starts reversing for a sell, and like it's already started reversing, it will not hold this trade again. So the main thing is now knowing how to pick your point of interest, knowing which one to pick. So the first rule says it has to trigger a break of structure or a market structure shift. Second rule says it needs to have liquidity protecting it. Third rule now says it needs to be unmitigated. Fourth rule says it has to be the one closest to liquidity. So if I want to draw a diagram for this, let's say, for example, this this trade now, the market now does this kind of break. So here is your breaker block, right? And then down here is also a breaker block. And then here is your what? Other block. So after market does this break, let's say this is the first pullback it makes. Here is your inducement and pushes up. So this is your inducement. So knowing that this is your inducement, what is your inducement? Your inducement is your liquidity, which is also the first pullback that market makes after a break of structure or a market structure shift. So this is your pullback, your liquidity. So this is your inducement here. So now this is a point of interest breaker. Understand? This is also another point of interest breaker. Breaker is a zone that market is supposed to a failed order block. Normally, if market is trending, for example, here is your resistance. So market breaks this zone. This is a breaker. Market breaks this zone. This is a break. So those zones that were supposed to hold markets down and market keeps breaking them, those are actually breaker blocks. So for example, this is a lower high, lower low, lower high, lower low. So market was supposed to come here and make another lower low, and market breaks past it. This zone that it broke past is what your breaker block is. This zone that is also broke past is what your breaker block is. So a zone that market is supposed to react from to the opposite side that fails, a failed order block, that is what your breaker block is. So in a scenario like this now, market uh, market made this break, this shift in market structure. After that, he made this pullback, which is your inducement. Now, how do you now know the point of interest to use? Most people will be waiting for the other block down here. Most people will not know if they will use their entry from this breaker here. Most people will not know if they use their own from here. Now, if you pay attention to the rules, the first rule says it needs to trigger a shift in market structure, which we have right here. Second rule says it needs to have liquidity protecting it, which we have here, which is our inducement, which is our illiquidity. Third rule says it needs to be unmitigated. It means that price needs to not have tapped into this point of interest before. If you pay attention, this breaker was not tapped. This breaker was not tapped. This other block was not tapped. So which one will you now use? Now the third rule now says it needs to be the one closest to liquidity. What is our liquidity? Our liquidity is inducement. So which point of interest among all these three is now closest to inducement? This one right here. So our entry will be picked from here. So this is where market will react and start buying from. Yeah. But in a scenario where after market does this a scenario where after market did this break, and this is the pullback right here. This is the pullback that market made before going up. That means that our inducement is here. So this is our inducement right here. Now, if you now follow up those rules, it says it needs to trigger a shift in market structure or a break of structure. Yeah, we have that. Second one, it needs to have liquidity protecting it. Yes, we have liquidity, which is our inducement. Third one says it needs to be unmitigated. So this breaker block now, market actually has tapped into it and mitigated it after the shift in market structure or the break of structure. So this breaker block here is no longer valid to be used as entry. Why? Because markets already mitigated it during the first pullback. So you can no longer use this breaker as your entry. And the fourth one now says you have to use the point of interest closest to liquidity. So this other block is valid to be used. This breaker is valid to be used. But which one are we going to make use of? Now make use of the one closest to our inducement, which is the one right here. This is where we take our buy from. Do you understand? But in a scenario also where after market did the break of structure or the structure shift, whoever is drawing this stuff should stop. After market, so let's say this is our breaker here. Our breaker is also here, and this is our other block. And after market does this shift in market structure, the pullback happens to be here. If market did this pullback, it means our inducement will be right here. So the pullback is the inducement. So let's say market does this inducement and pushes up here. So now what are we going to use as our entry next time? So now if you pay attention, the first rule says it has to trigger a shift in market structure or a break of structure. We have that shift in market structure. That's to have liquidity protecting it. Our liquidity is inducement. We have it right here. Third one says it needs to be unmitigated. And we now check this breaker block during the first pullback, market actually touched it and mitigated it and went below it. This second breaker here, during the first pullback, market actually mitigated it. Now, which point of interest here is now unmitigated? this last one. The last rule now says that should be the one closest to liquidity. So out of all this point of interest, which one is still valid? This other block, and which one is closest to this inducement? This other block. That's when you now use your other block as your buy. So that is why, as this market did this structure shift here, normally most people would have been waiting to take their trade from this other block, but they never got that opportunity. Why? Because this was where our inducement is. And our inducement here, which point of interest is closest to it? The closest point of interest to it is now this breaker block. That was why I took my buy from this breaker block. Same thing as this second trade here. So this is our what? This is our downtrend, lower highs and lower lows, lower highs and lower lows. The market now triggered a shift in market structure right here, which means our first rule to picking a point of interest was met. After that, market made a pullback, which is this inducement right here. I'm market to IND, so our inducement. So our inducement is valid, our market structure sheet is valid. Now for point of interest, we have this breaker block at the top here. We have the second breaker block here, and we have this third order block here. Which one am I picking as my entry? And if you pay attention, after market did this structure shift, it made a pullback, but this pullback unfortunately mitigated this our breaker. This first breaker here was mitigated during the first pullback. This second one was not mitigated. This other block was not mitigated. Now, following the rules of picking a point of interest, it has to trigger a shift in market structure. We have that. It needs to have liquidity protecting it. We have inducement here as liquidity. Third one says it needs to be unmitigated. It means that price needs to not have tapped this point of interest. Now, since price already tapped this our breaker block here during the first mitigation, this one is now eliminated. We can't use this breaker block anymore because price tapped it during the back is eliminated. So which point of interest is still valid? This breaker block here is valid. This other block down here is valid. But which one are we going to use as our entry? The one that is closest to liquidity. What's our liquidity? Our liquidity is inducement. Which point of interest is closest to inducement? This second breaker block here. That was why I took my buy from this breaker block right here. And just see, as market came there, tapped in, it never got to this other block. So anyone wanting to take this trade from this other block would have missed this trade. And that is how you take a trade using these 4 rules in picking a point of interest. Get those rules down. These 4 rules in picking a point to get it down. Either take a screenshot of it or write it down because you're going to need it actually. So most people will now be waiting for other blocks. They will end up missing their trades, not knowing that price already buying from another point of interest. I think I have set up here that I've taken before that I used that breaker block on. This same trade here, for example, this same trade here. So price did this break of structure from here. After making this break of structure, this zone that I marked out is what my inducement is. So if you pay attention down here, you see another block down here. But at the same time, there's also a breaker block here. This breaker block is a failed order block. But paying attention now, our inducement never mitigated this breaker block. That is what still made this breaker block very valid to be used as entry. That was why my entry was from this breaker block and not from this other block down here. This trade made me about $2,000 with $199 capital. So once you're precise with your entries, knowing which point of interest to use, it maximizes your reward and reduces your risk. Because if you're not really sure of which point of interest the market will make a reversal from, that's when you now see people picking other or breaker blocks, and then their stop loss will cover both their breaker block and come down, cover their other block and cover the other one because they're not sure of the exact zones that market will reverse from. But if you're very precise with your entries, these 4 rules, you can never be wrong. Once you have marked out that you need to trigger a break of structure or market structure, and you see that you have liquidity protection and you see inducement. The third one, knowing that it needs to be unmitigated. Once you know that it needs to be unmitigated and the point of interest that you're picking your entry from has been mitigated before, you know that you are wrong. So you don't need to stretch your stop loss. So what you will just do is just to remove your entry from that one that has been mitigated before and look for an unmitigated one that is closest to liquidity. So that is just it for this topic. So, like I said, a breaker block is a failed order block. So, if you're expecting to take a sell from this other block here, and market actually failed, you're expecting now to take a buy from this breaker and start pushing off. So, a breaker block is a failed order block, but you only use it when it meets all these 4 criteria, when it's unmitigated and when it's the closest point of interest to liquidity. So that is just it. If you have any questions, you can ask. Um, reason wise, what's your question?
Yeah, bro. Good evening. Please, I'd like to show us this setup. Like, prepare you're trying to catch a sell with the same strategy, please.
Okay, let me see. Let's not do this stuff on the screen. Get it off. So this trade here, pay attention to this trade. You
Yeah.
see market was on a previous uptrend. So you can see higher highs and higher lows. Higher highs. So see, the market came here and did what? A structure shift to the downside. So this is a market structure shift here. So if you pay attention now, you see your order block here and your breaker block here. But since this is our first pullback that market made after that structure shift to the downside, this is our first pullback here. This pullback never mitigated this breaker block, and it also did not mitigate this other block. So this is our inducement here. But following those four rules, that's to trigger a structure shift. You see that structure shift when it occurred here. That's to have liquidity protecting it. This inducement, this is this full pullback here, is our inducement. That's the liquidity. Third rule now says it needs to be unmitigated. This breaker block was not tapped during this first pullback. This other block was also not tapped during the first pullback. This other block is a valid point of interest. This breaker is also a valid point of interest. But knowing which one to use now, the fourth rule now says it needs to be the one closest to liquidity. Between this other block here and this breaker block here, which one is closest to liquidity? This breaker block. That was why I picked my entry from this breaker block and market respected it. I think before the analysis, when I made the analysis, it should still be here. I'm coming. Let's see if I can find the before. Aha, see, this was the before. So I picked my entry from the breaker, regardless of there being another block up here. Because why? Following the rules, this breaker block has not yet been mitigated and is now the one closest to liquidity. That was the before. And then this is the after. So hope I've answered your question.
Yeah, yes, thank you.
Steady.
Yes, good evening.
Yeah, good evening.
Please, I have two questions. So,
Okay.
in picking your POI, does the color of candlestick matter? Like either order block or breaker block?
How?
Like in picking your POI, does the color of the candlestick matter? Either a red candlestick or a blue candlestick? Does it matter?
Red
Do you
or blue?
understand?
No, my chart color is blue now. I don't understand. Is it the chart settings, the color settings? There's a specific shape of an order block. The specific shape of a bullish order block is you see a bearish candle, you see a bullish candle engulf it. Specific shape of a bearish order block is you see a bullish candle, you see a bearish candle engulf it. That's just it. The
Okay.
chart set.
Thank you. Thank you. The second question is this: if markets broke structure, then came back the other side and formed liquidity, the inducement, that's the inducement, right?
Yeah.
So sometimes markets might not come back to the other block you marked down there to pick your POI, then start buying. Sometimes markets will just create that inducement and just keep going up. At that point, what are we supposed to do? Just leave the market or wait for it to come back to your POI before you take an entry?
You wait for your POI now. If your analysis says that market has already, if your POI is correct, for example, not when you've picked the wrong POI, if you made the analysis correct, you have your structure shift, you have inducement, and you are picking your other block when the breaker has been mitigated. Yes, and you know your other block is correct to be picked. You just wait for it. But in a situation where you picked the wrong point of interest, like picking another block when your entry was supposed to be from a breaker, then you miss that trade. Start looking for other opportunities. But when your POI is properly picked, you just wait for it. Market can take days to even come to your POI, months sometimes. You can just start looking for other opportunities, but you can still have your main entry there.
Okay, thank you. That's the question. Thank you.
And Salim.
Salim, what's your question?
Hello, can you hear me?
I can hear you.
Okay. My question is, if the market is bullish, breaking structure to the upside, and the market now breaks structure to the downside, you call that inducement, but at the same time, that can also be a market structure shift. So how are you going to confirm that?
I do not call it an inducement. I said inducement is the first pullback. The market structure shift is there, or your change of character, but inducement is the first pullback, not the shift itself. The pullback that market makes towards that direction that it broke structure from or shifted structure from. That is what your inducement is. That is not what a market structure shift is. Why not in the first class? The first class, the inducement definition is the first pullback, not the structure shift itself.
Okay. And my second question is there any specific time frame to look for your market direction?
There's no specific time frame.
Okay.
If you check 4 hours time movement direction, it's the same thing as a 1 hour time frame direction. It's the same thing as 30-minute direction. Just that on 4 hours is fewer candles, on 30 minutes is more candles. But direction is direction. That's just it. So
Okay.
if you're a day trader, I would suggest from 15 minutes somewhere to 4 hours, 3 hours. But I trade mostly from 1 hour down to 15 minutes or 5 minutes for me because I'm a day trader.
Okay. Thank you.
Course is Ochukwu Pascal.
Yeah, Tony, good evening.
Good evening.
Please, can you go back to that buy analysis that you made?
Which one?
The first one that you did, the buy one.
You do this with some coin.
No, not this one.
Okay, with some coin. This one.
Yes.
This one.
Yes. So my question is, for example, now the buy order block is bullish, is a sell candle engulfed by a buy candle, right? Now,
Yes.
what if in a case whereby it takes two buy candle to engulf that sell candle, is it still valid? Or must it
It's still
be
valid
just
since it still got involved. It's still valid. Understand? It's still valid because it's still the thing there. For example, this is still an order block. Why? Because
Yeah,
after
that's
market
actually
made
where
the
I
bullish
mean.
candle,
Yes.
it's still valid. A
Okay,
breaker
all
can
this,
still be a resistance zone.
okay,
A
it can
breaker
be
can be a
multiple
resistance zone.
candles.
A breaker can it can be multiple candles. It can be a resistance zone. It can be a support zone. Just know it's a failed POI. Any zone that market normally reverses from, or any zone that market newly broke from, just like break and retest. Can be multiple candles, can be a single candle that engulfs it. Or that's what a breaker is, a failed POI. So it's still valid.
Okay. So my second question is, can doji or pin bar like at the end of that last order block, can it as well
This
mean a
this
valid
one,
order block? Yes. In other
yeah,
words
it
now,
can, as long as a doji is actually what we call a single candle order block, a scope. It's an order
okay,
block. You can take your trade from there. It's a valid
okay, you can
POI.
as well use doji and pimba, right?
Yes, you can.
Okay, thank you.
It's another block. Yes.
All right.
Joshua,
Yes, good evening.
good evening.
Yeah, sorry, there's a point I want to get cleared about. You said like the breaker block, it has to be from the body or from the wick.
From the body actually. So if you have a week and market mitigates the week of that breaker block, well, it depends. If it's a normal order block shape, like for example, this kind of order block, market needs to mitigate the body for it to be a proper mitigation of that breaker block. Majority of normal order blocks, market needs to mitigate the body. This kind of order block too, same thing. If market should mitigate the body for it to be a proper mitigation of a breaker block. So it's the body, not the wick. The only time you can use the wick is if you have a scenario like this, like a wick is actually like the high of the market. This is something like this, a wick. The market eventually comes and then breaks past that wick. And so you can now use the retest of that wick as the resistance zone to now get buy. But if it's an order block, that's to be the body of that order block for a breaker block mitigation.
Okay. And you said something about inducement when you were doing the other charts, the charts you just left. So do we need to have a valid pullback to use the next one?
Yes, inducement needs to be present. Inducement is a valid because it can be a long week, it can be a week that just goes back towards that direction that market broke from. Pay attention to this chart.
Okay.
This was a week, but the week was slightly close to that direction that market broke into. So this is still an inducement because if you check lower time frames, this small week here is actually multiple candles that traded below that zone that market broke from. So it's still a pullback. So you need to have an inducement. It's actually
Okay.
that inducement that will tell you whether you're picking your trade from the breaker block or picking the trade from the other block. If the inducement mitigates this breaker, your next entry will be from here. If the inducement mitigates this breaker, your next entry will be from the other block. So paying attention to where the inducement mitigates first before pulling towards the direction that it broke into is actually very, very important. It will tell you which point of interest to use because one of the rules of this strategy is you have to pick the point of interest that is unmitigated. So where this inducement actually touches first before pushing up or pushing down, it's actually very vital to this strategy because if you make a mistake and pick a point of interest that has been mitigated before, it's more likely that you take a loss on that trade. And if you make a mistake, not seeing that price has not mitigated this point of interest and you're picking the next one, this is trade. You understand?
Okay. Thank you very much.
Niche. Too many questions. I'll answer like 3 more and the rest will just come to my DM. Niche, you are mute. Please, what's your question? Anayeka Niche, what's your name? Yeah, answer or have a question.
Hi, good evening.
Yeah, good evening.
Yeah, please, I have a question.
What's your question? I can't hear you. I can't hear you. I can't hear you.
Well, I can hear you.
Okay, I can hear you better. So what's up?
Yeah, I'm saying because what you are showing here, when we're picking points of interest, like order block or breaker block, you used to pick the full body candle. Like if it's an uptrend, you used to pick the full body candle, or how do you pick your interest of stop loss to measure your stop loss? Do you pick the full body candle, or how do you do it?
Okay, so for example, now this is a bearish order block, and this was supposed to be a trade that you take for this other block is supposed to take a sell from this other block. And if you're taking yourself
Yeah.
from this other block, where would you actually take yourself from? Take yourself from this demarcation right here. So
Yeah.
if this is to now be reversed, you are taking your stop loss. You keep your stop loss where you are actually supposed to keep your entry for your sell. You understand?
Yeah.
And so, for example, let's say this trade, for example, this sell trade. You're taking a sell here. You take your sell from this demarcation right here. But if this was to be reversed and you're now taking a buy from this breaker, if you put your buy here, your stop loss should just be below that place you would have normally taken your entry from if you are taking a
Yeah.
sell in this scenario. That's just it. You understand?
Okay. My second question is that in 4 hours, sometimes you have uptrend in 4 hours. Why in 1 hour we have a reverse, like a reverse for continuation? How do we follow up on such trade? Where in 4 hours you have an clear uptrend, but in 1 hour and 15 minutes there is a little pullback.
The thing is, the reversals that happen do not just happen out of nowhere. Reversals happen from point of interest. Let's say, for example, your trade was bullish, yeah. So, and this is like
Yeah.
another block for a sell, and your trade has been moving like bullishly from, like let's say from here, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and it comes to this other block here that you know that may
Yeah.
normally cause a reversal in the market, and then now triggers a shift in your trade. This is, you can actually, even if your 4 hours is bullish and your 1 hour has already triggered that shift in market structure, and they happened where that point of interest that would have normally caused a reversal for you is, you can actually best believe that this can actually cause a reversal in your trade. So that 1 hour time frame can actually be the place where your shift in market structure has already started reacting from. So shift in market structure, they don't just happen out of nowhere. There's already a point of interest that will trigger it. So if it's happening out of nowhere where there's no key point of interest, you can just call it a pullback. But if it's happening at a zone where market is actually supposed to cause a reversal, you can actually call that an actual shift of market structure. It don't just happen out of nowhere. There's always a point of interest where it happens.
Okay. Thank you.
Two more questions. Two more questions. So, uh, Caleb, Caleb O'Malley.
Yeah, hey Johnny, good evening. Can you hear me?
Yeah, I can hear you.
Okay, so my question is, there's actually a chart that I saw on BTC USD. It gave this, like the way you explained it, it happened the way you explained it. It gave a break of structure on the 5 minutes chart. It gave a break of structure and it gave that inducement, the pullback, went up, broke structure, danced a while for some minutes at the top. Then it came back down, but it had a break of structure, which was like a breaker block, and before it broke that structure, it gave another order block on the same line with
Can
the
you get
breaker
that?
block.
Can you get that chat? I'm just send the chat to my DM. Like the chat.
Okay, I'll
Send it
send
to
it
my
now.
DM.
So it gave that breaker block and order block on the same line. But now I marked everything out. I was expecting it to come back. Then the market came back down to around that same level, but it did not tap into that other block and the breaker block. But there
Just
was
understand
a tiny fair value gap there.
markets may still come back and tap you. You never know. BTC has been bullish since, and this move now is not actually like ordinary. This is just people pumping money into the market. So a lot of places in this market is still left. For example, this breaker here on BTC has not yet been mitigated. There's also another zone here on BTC that's still not mitigated. So market may still eventually sell and then clear up all this liquidity and actually trigger your point of interest and start buying. This whole move on BTC now is not ordinary. It's not market just moving because it's moving. There are people pumping market. This is a crypto market. Understand?
Mm,
So your point of
okay.
interest may eventually still get tapped in. Just because you miss an entry today does not mean that entry will not still be tapped tomorrow. You understand?
Mm. Yeah. Thank you so much. I'll send the picture to your DM now.
I think that's basically it. So I asked how many questions. Any more questions you have regarding what I thought, just please come to my DM. I will send the recordings of this class to the group chat. And I'm going to also unlock the group chat. Please, reasonable questions. I locked it because we really had a class and I don't want people asking relevant questions in the group. So I'm about to unlock the group Now you guys can test and communicate with each other. So I'll send the recordings of the class to the group. So that's it for today's class. Next class, we'll talk about types of liquidity and how to take profits using those types of liquidity. Is there any more questions? Just come to my DM. So that's just it. Good night, everyone. Enjoy your night. Back test